The SEC oversees the financial industry by enforcing actual laws, creating a new organization to oversee content on social media platforms, according to I don't know what, Tim. I don't know how this will impact these companies. It sounds kind of negative. I don't know.
It sounds kind of like what China's doing right now, which isn't going so well. So, or at least what they're talking about doing. So, I thought at least framing the issue, Jack Dorsey once again was, I think, very succinct. It's either too heavy of a hand, too light of a hand, or most importantly, what is it the hand that the advertisers are going to tolerate and get behind? And that's really all that matters. And what we've seen so far is social media is the only game in town. And therefore, we haven't really seen a hit on these guys. This conversation goes round in circles. And I think ultimately, if you look at the charts, what's going on for these companies right now has nothing to do with what's going on Capitol Hill. It really is a function of valuations, where interest rates are, where liquidity trades have been. Apple's is close to a lengthy period below the 200-day, or I should say nearing it for the first time since, again, May of 2019. That's more what worries me.
Yeah, I was going to say people might be tempted to draw a straight line between the stock moves that we've seen today, or over the past few weeks for that matter, and what is going on in Washington. But as Tim had mentioned, BK, it sounds like it's much more of an issue of interest rates and where you think the markets are going in general, as opposed to regulation.
Yeah, I mean, listen, today was a super long thread, as the kids say, rivaled only by the thread that you would have if you actually tried to have some new regulation. So I think the market has just completely ignored it or shrugged it off. The moves in these stocks have a lot more to do. I agree with Tim. They have a lot more to do with rates and what's going on with big tech and all of that in terms of high PE ratios, compressing than they do that these hearings. I think investors are just saying, listen, it's not going to happen no matter what. They're never going to get a law passed. So we've got to take the companies as they are. And as long as user growth keeps going and as long as advertising rates or advertising continues to grow, then these stocks should be okay.
Yeah, we have a chart here that shows a percent off of the 52-week highs, Nadine. Facebook is only off 8% over from the 52-week high. Twitter's down by 24%. I'm wondering where you stand on some of these companies.
Sure. When it was down this morning, not just Twitter, but tech overall, we just covered some of the shorts. So it wasn't surprising to us that we saw a lot of the markets, including tech, come back into the green. Starting in the morning, you were looking at, call it 6-to-1 upside. So maybe I think it was like 3.7% upside and minus 0.6% downside. That's great asymmetry. So in my mind, obviously fundamentals have been good. They could improve during the year as companies continue to spend and continue to grow. But in the meantime, you have to trade the chop. It's been really volatile. And so on a day like today, you trade it one way. Tomorrow could be different. So it has nothing to do with what happened in Congress today.
Guy, you have a smirk on your face like the Cheshire Cat. So I go to you for your comment.
No, I mean, I love Nadine dropping asymmetry and trade the chop. I mean, that's old school stuff right there. I understand exactly what she's saying. I'll say this about Facebook, and I've said this for a long time, and I'm not shy about it. I mean, I hate everything about Facebook except the stock. And today I think it traded in the 290s. Your point about the recent all-time high, I think it was 304 in September, and obviously it's had a rough go. But they report in April, and everything that Julia said is true. And it's just, there's nothing really redeemable about it, in my opinion. Is it addictive? Yes, it's designed to be. All those things are true, yet people aren't leaving the platform, number one, and nor are advertisers, number two. The existential risk, the only risk that I see, is if it falls under the auspices of ESG investing, which is possible in today's world. If that happens, Katie bar the door. I don't know who she is, but you better watch it.
Every business, by the way, in the whole entire world wants a product that is addictive.
Shepard Smith here. Thanks for watching CNBC on YouTube.